You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 3rd day of May 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do 2 broadcasts every trading day. The first broadcast is our live training room. Now that's a private broadcast. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, you can do so by going to mytradingiq.com, and at the very top of the page there's a link that says 5-day free trial, no credit card required. Click the link, complete the registration form. It's an automated process, so it's important you fill it out properly. And then once you hit submit, if you filled it out properly, we'll get it. And then we will attempt to, same day, get your desktop set up, get your indicators indicating, and then the following trading day is when your trial will actually begin. But since today's Friday, if you sign up for the trial today, you'll not only have a 5-day free trial, but you'll have the weekend, Saturday and Sunday, to get familiar with the indicators and there are some markets that trade around the clock, 24/7. And you'll have access to those via the TradingView platform. Now, when the live training room ends every day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast. That would be this one. And unlike the first broadcast, which is private, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, because you only have to do it once, go to mytradingiq.com, scroll down the page to where it says Afternoon Broadcast. Click the link. There you'll have just a 30-second registration form, and you're done. Going forward, what will happen is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. And you'll escape that, about 10 to 15 second lag time that there is between our platform and the simulcast on YouTube. Now that's the other way you can join the afternoon broadcast live. Our YouTube channel is easy to remember, youtube.com/CFRN. You already know the YouTube part, so all you got to remember really is just the CFRN part. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch all of them, but pick some days at random. Watch a little bit, fast forward, watch a little more, pick another day. You get the idea. What you'll discover is the thread of connectivity and the thread of continuity that's woven through each and every daily episode and our very vibrant trading community. youtube.com/CFRN. We'll open with our daily devotional and a word of prayer as we do every day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us, give us a recap of everything that happened this morning in the live training room. Then we'll go live on the TradingView platform for a half an hour, do some live trading, and then I'll wrap things up with our good word for the day. Now, the topic of the devotion we've been in this week, going through hard times. Individually, we go through hard times. As a family, we go through hard times. Businesses go through hard times. And even nations go through hard times. Our scripture today is Romans 8, verses 26 through 28. And I'm going to share with you from the Message translation. Meanwhile, the moment we get tired in the waiting, God's Spirit is right alongside, helping us along. If we don't know how or what to pray, it doesn't matter. He does our praying in and for us, making prayer out of our wordless sighs, our aching groans. He knows us far better than we know ourselves, knows our pregnant condition, and keeps us present before God. That's why we can be sure that every detail in our lives of love for God is worked into something good. Again, that's Romans 8, verses 26 through 28. So, bad times, hard times, tough times, rough times. Maybe you're going through one now, or maybe you're having a mountaintop experience. What's important to understand is that life is full of mountaintop experiences, followed by experiences in the valley, which then leads to another mountaintop. Today we'll talk about how God uses trials in our life. As we go through these challenging seasons in our life, we either grow through them or we don't. And there is no judgment if you find yourself still upset with God when hard times come your way. We've all been there, but as we seek Him, we'll find Him. One way we can tell that our faith is maturing through trials is when our why questions become how questions. Yesterday, as we talked about the whys, today we'll talk about the hows. We ask God questions like, how are you going to use this in my life? How will you impact others because of this trial? How will you bring about good through this devastation? There's a popular phrase circling in Christian circles, and it's that God wastes nothing. And that is absolutely our hope-filled truth. Whether we're thrown into unwanted, challenging circumstances, or our choices led us there, God will use every single bit of it to redeem our lives, impact others, and receive glory. So let's talk about what God does with our pain. He changes us. When we suffer through fiery ordeals that hurt us deeply, most of us just want to get over it. But in order for us to be truly over it, we must go through it. We must push through the pain, addressing whatever is breaking our hearts in order to see healing on the other side. As we go through the storms in our lives, we will be stronger for it. You've, of course, heard the worldly saying, this isn't in Scripture, but whatever doesn't kill you only makes you stronger. Number two, what does God do with our pain? He changes others. Many of us have endured challenges in our lives that give us experience no formal education can. We may not have a degree from college, but we are experts in our field of pain. God sees this and considers us his vessels to help others. Paul writes in 2 Corinthians 1:3 that he comforts us so we can comfort others. He doesn't allow us to encounter the darkest of adversities just so we can say we did it. His desire is that we take the comfort he gave us and share that with others. As we read in Romans 8:28, in all things, God is working for the good. Not in some things or a few things, but in all things. God took the worst thing that could ever happen, Jesus dying on the cross, and used it for the greater good, the salvation of all mankind. Greater the pain, the greater opportunity there is for God's redemption to be beautifully displayed. With each redemptive story, God receives glory for how he has turned the tragedies in our lives into triumphs. Monday will be our final day on this topic. We'll discuss why our challenging seasons last longer than we would like. And in the waiting, we'll learn how to trust God more and grow in our faith. Something to reflect on. What is the most difficult trial you've gone through? How can you use your pain to impact someone else? Join me in a word of prayer. Heavenly Father, as we come before you today, we're comforted by the words we found in Romans 8. Thank you, Lord, for the assurance that your Spirit helps us in our weakness and intercedes for us with groans that words just cannot express. Lord, we confess that there are times when we do not know what to pray for or how to pray as we should. In those moments, we rely on your Spirit to intercede for us according to your will. Thank you for the gift of your Spirit, who guides us and empowers us to pray in alignment with your purposes. Help us, Lord, to trust in your promises that in all things you work for the good of those who love you, who have been called according to your purpose. Give us the faith to believe that even in the midst of trials and tribulations, you are working all things together for our ultimate good. Lord, today we surrender our lives to your will and your plan. Help us to walk in obedience to your word and to follow wherever you lead. May your Spirit continue to transform us into the image of your Son, Jesus Christ, as we seek to live lives that bring glory and honor to your name. Thank you, Lord, for your faithfulness and your love. May we rest in the assurance of your presence with us, knowing that you are always working for our good and your glory. It's in Jesus' name, believe and pray. Everybody said, amen. Amen. And happy Friday. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. The Dow's up 418 points. That's over 1%. The NASDAQ is up 292 points. That's almost 2%. S&P 500 is up 55 points, over 1%. And the Russell 2000, our man in the street, is up 19 points, just shy of 1%. In the commodity basket, crude oil down 50 cents, trading 78.45 last. Gold down $6.70, trading 23.0280 last. Silver down 23 cents, trading 26.59 last. It's a drop of almost 1%. In the Asian markets at the close, the Nikkei dropped 37 points. Shanghai fell 8, but the Hang Seng gained 268, which is 1.5%. And in the European markets at the close, FTSE up 41 points, the DAX up 105 points, the CAC up 43. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a solid green Radio Friday here in the US of A. So, let's talk for just a second about why the markets are so bullish today. U.S. labor market cooled notably last month in both hiring and wage growth, slowing more than economists had expected in April. The U.S. economy added 175,000 new jobs, and the unemployment rate rose to 3.9% last month. Now, that's the data that came from the Bureau of Labor Statistics earlier today. Wall Street economists had expected non-farm payrolls to rise by 240,000 and the unemployment rate to remain at 3.8%, according to Bloomberg data. Wages also rose less than forecast, with average hourly earnings rising 0.2% over last month and 3.9% over last year. Economists had expected to see a monthly jump of 0.3% in April and a 4% rise over last year. So, that doesn't sound like good news, does it? Remember, this isn't your father's market. The exuberance is that the data on the economy is so bad that perhaps at the next FOMC meeting, we just might get a rate cut. Think about it. We need more people to lose their jobs or not be able to get jobs in order for the Fed to ease up a little bit. I've never gone along with healing a fragile economy by raising interest rates. But again, they're not following my recommendation by any stretch. And here we are. So what do? Well, we deal with what the market deals us. And we deal with it, and we trade what's in front of us. So let's look at Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just the E-minis. It's also crude and gold and silver and euro and bonds. We are in week 300. 300 weeks ago, we launched Logic 247 after the beta test. Now, this recap was done this morning at 6:30 a.m. Eastern. So some of these numbers will change this afternoon when Valerie does the final recap for the week. Since the markets opened last Sunday night at 6 p.m. Eastern, we've issued a total of 48 alerts. At the time of the recap, we were still waiting on the outcome of 13. It gave us 35 actionable alerts, of which 3 or 9% would have been stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Over the last 300 weeks, what we've averaged on a weekly basis is 20% or less of the logic alerts being stopped out, again based on market structure and that very simple process we teach all of our passport holders. Now, long before we had Logic 247, we had our original alert service, Concierge Trade Alerts. Now, they're a little bit different in a couple different ways. Number one, the alerts don't come out around the clock the way the logic alerts do. The CTAs are posted as a static report shortly after the Globex open each evening. So the Friday session began last night at 6 p.m. Eastern here in the US. This report was published 10 minutes after the open. Now, the purpose of the alerts is not for you to just trade the alerts and not have to learn how to trade. The alerts are actually one of the educational tools to help you learn how to read the chart. When you look at a chart, especially if you're new to trading, it all looks incredibly random. A bunch of noise. But there's so much information that can be mined. And with the logic alerts, you get an entry price, an initial target, which is designed to help you get your goal for the day. And then I look left for you to spot previous swing highs and swing lows that can become obstacles to the trade. So you might have an entry price, an initial target, a second target, a third target, a fourth target, and then a final trade to target. The quickest way to get a handle on how to read price is when a logic alert comes out, go to the 30-minute chart of that market, even if you don't trade it. Draw a horizontal line on your 30-minute chart where the entry price is, and then where the initial target is, and the second target, the third target, the fourth target. And when you're done, sit back and look. Okay? Look at those horizontal lines. And you'll see that each one represents a window of opportunity to the next obstacle. So let's say you miss the initial trigger for whatever reason. You're not at your desk, it's in the middle of the night. But if it's long and price continues to climb, then once we overcome one obstacle, like a previous swing high, then we have a window of opportunity up to the next previous swing high. All alerts are created on the 30-minute chart. First thing you should do when this report is published, go to the 30-minute chart of the markets you actually trade. I was talking about the logic alerts, now I'm talking about the CTAs. Go to your 30-minute chart and make a note of where price is at this time. Even if you show up 2 hours later, still go to the 30-minute chart, make a note of where price was at that time. Draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to make sure you stay on the right side of the street. Price gets above the 30-minute BBC, then it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. Now the BBC, that just stands for bull, bear, cross. It's the green line you'll see on all my charts. Daily, 30-minute. If I showed you a 5-minute chart, it would be there too. Okay. Anytime price gets above the green line, relative to whatever time frame you're looking at, we're bullish and anticipate higher prices. When price crosses below the green line, then we're bearish and anticipate lower prices. Again, relative to whatever time frame you're looking at. And we're going to teach you how to utilize multiple time frames. The more you use multiple time frames, you'll eventually start to think in multiple time frames. With the CTAs, you're kind of stepping up your game, the learning process, part of the education. You get to look left yourself. You get to find previous swing highs or swing lows if it's a short. And you start to understand how those previous swing highs and lows can become current support and resistance. You'll also learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is above the 30-minute BBC, it's trying to reach the zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. We've published the zones every week for our members since December 14th of 2009, closing in on 15 years. The one thing that's changed about the zones since we first started publishing them is absolutely nothing. Once you understand how price behaves at and near a weekly zone, the zones will become one of the most important tools in your trading toolbox. Beyond that, resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now we cover all the same markets with CTAs as we do with the logic alerts. Now, I know the markets are very bullish from all those numbers that I gave you from around the world. let's see what that looks like on the daily chart. We talked about yesterday the fact that price, if we closed above the step line, that's the black line, then price would have its next obstacle at the BBC. Pullback holds more often than not, but eventually it trades through. We traded through back on November 2nd. We traded through here on April 4th. Okay, and as you can see, the pullback holds more often than it doesn't, but eventually it trades through. Keeps the markets fluid and tradable. It's just how markets work. The question now is, do we have a leg and a retracement that's going to lead to another leg to the downside? Or do we have a leg, a retracement, and we're about to get a leg that's going to take us to the all-time historic high put in on April 1st? We don't know the answer to that, do we? We talked yesterday, and every day this week and last week, about this trend line. If we got above the BBC, if we spiked it, okay, and that really became a reality when red and falling became blue and climbing. One is bearish, the other bullish. So price came down to blue and climbing. The official term is CFMA1. I just refer to it as red and falling, blue and climbing. Blue and climbing is bullish, red and falling is bearish. So we found support here and at the 24% fib retracement. That has now sent us back up to and through the BBC. Now, again, this is based not on good news, but on hopes that bad news will force the Fed to lower interest rates. I know that gets kind of complicated. So that's why we're technical traders and don't really get too involved with the fundamentals. But the FOMC is about the biggest economic report you'll get. Last night during the workshop, price was trapped between the step line as support, and you can see that is the low of the day, and the BBC, which was resistance. But we've overcome the BBC. We've spiked that trend line, and right overhead, we've got the 62% fib extension. And then right here, we have a bearish cross. That's when the red line gets below the green line. Whenever we have a bullish or bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance. Whether you're looking at the daily chart or your 30-minute chart, even a 5-minute chart. Larger the time frame, the more important it is. So if buyers keep the pedal to the metal, if they're really serious and are willing to carry this home over the weekend, then we could close above this 62. But Sunday night, make sure you're aware of where this bearish cross took place. Okay? Because that could be the resistance that sends us lower. We got to take out this low from April 19th. It's what, 2 Fridays ago? In order for us to get down to the area where I think the market wants to go, which is a 50% fib retracement from the October 27th low to the April 1st high. So how and where we close today is important. I feel like this is a head fake, but I don't have crystal balls, so all I can tell you is be cautious on the long side and trade what's in front of you. As I said earlier, the 30-minute chart is where all of the alerts are created. both the logic and the CTAs. This is where we opened last night. Price retraced to the BBC. The pullback held. Pullback holds more often than not. You can see it holding here, but trading through here. Okay, so the pullback held. That sent us up to the weekly zone at 5111/12. We consolidated for a few hours. Only three things happen at a weekly zone. 70% of the time will be consolidation. 20% of the time will be rejection. 10% of the time will be the slice. That's when price slices through a weekly zone like it's not even there. When that happens and the move runs out of steam, price will typically retrace the zone is sliced through and continue in the direction of the slice. Today's high came in at the weekly zone 5165/66. The actual high was 66.75, so 3 ticks above the zone. But then look what happened. We didn't come all the way back to the BBC, but we did come back to this zone. Now we've continued in the direction of this. We had another slice here. It immediately came back to the zone and continued in the direction of the slice. So from here, look at the step line. When the step line crosses blue and climbing, typically tells us we're going to get a pullback to the BBC. We see it every day, day after day. Okay, just like here, step line cross, pull back to the BBC. And now look at the step line. It has flipped and is pointed in the opposite direction. Okay, so the next major resistance on the 30-minute chart be that zone. And the highest zone for the week is way up at 5237/38. Don't suspect we'll see that today. That would be quite a feat. But keep it in mind when the markets open Sunday night. And then the new zones will come out Monday morning at 6:15 a.m. Eastern. What I really want you to notice is, where did the market find resistance today? At a zone. Where did it find support? At a zone. As I said, price is always trying to reach a weekly trading zone. And because this pullback to the BBC held, we never had any thought about trading to the short target. Because as long as price is above the BBC, we're thinking higher prices. On the Dow, here's where we opened. Now this is bullish because we went sideways. We had red and falling overhead, but instead of pulling back to the BBC, we got above red and falling and made our run right up to the long target. That resistance did send us back to the BBC. Pullback held. Now we've had 1, 2, 3 attempts to move higher, and they've failed pretty spectacularly. This is the highest weekly zone for the Dow. But again, the step line crossed blue and climbing. We did come back to the BBC, but now look at the step line. It's kind of unusual to see that, okay? It is angled sharply up. So do I think there's a good chance we could perhaps test the high of today? Or at least attempt to test it? Yes. I think we'll make it all the way to the highest zone. I don't think so. That also would be quite a feat, considering how much we're up already on the session. On the Russell, here's where we opened last night, right here. It's 10 minutes into the life of this candle that the CTA targets were published. Pulled back to the BBC, consolidated for hours. Then red and falling turned to blue and climbing. And 8:30 news this morning, like a rocket ship. Still one more zone way up overhead. Don't think we'll see it today, but keep it in mind Sunday night. Now, just like the Dow, we had 1, 2, 3, 4 failed attempts to get above this area up at 2069, 2070. We're printing green, we're above the BBC, but blue and climbing is directly above price. Once blue and climbing gets directly above price, now see here on the way up, it was running alongside. We had price, the step line, blue and climbing. But now, once it's directly above price, it could be on its way to doing this, turning into red and falling, which turns a bullish scenario into a bearish scenario. So 2053 area, I would probably look at 2051 as potential resistance. If price does continue to climb, make sure you let it get above this, and then you've got plenty of room right here. Get your goal for the day. On the NQ. Here's where we opened last night and ran right at the target. Pulled back to the BBC, the pullback held. Made another run to the target. Pulled back to the BBC, pullback held. And then that news this morning took us to this zone and to this zone. But this zone became resistance. When price rises to a zone, we expect resistance until proven otherwise. Price drops to a zone, we expect support until proven otherwise. The step line is crossed. We've got this zone overhead. We weren't able to close above it on the first attempt. So this could be where we start to see some weakness and get a retracement back to the BBC. But the question is will the institutional traders who move price be willing to carry this home over the weekend, or will they liquidate their positions going into the close? So we could see in the final hour a sell-off much like the rally we saw yesterday going into the close on all the indices. Moving on to crude, here's where we opened last night. Basically just consolidated sideways. Tried to dropped enough you could have got your goal for the day. And we got back above the BBC. We hit the long target. And that resistance, which was just above this bearish cross. See how we spiked that bearish cross, but then quickly reversed. And it took us all the way down to the short target. Crude is the only market where we are below the lowest weekly trading zone. And we're not above any of the highest weekly zones. Consolidating here at the target, which was the low of yesterday. It's right here. Remember, the vertical line separates today from yesterday, Wednesday, Tuesday, etc. But this is the lowest weekly zone. Typically, when we get below the lowest zone or above the highest zone, by close of business on Friday, we're back to that highest or lowest zone. I don't see that happening today. This will be one of those handful of weeks where we close below the lowest zone. At least that's how it looks from now. Something pretty spectacular would have to happen to send price higher. You ready, Michael?
I am ready.
Okay.
I hadn't noticed that was going on with crude oil this week.
Yep.
All right. Let me take everything over here.
All right, guys, we'll finish up that recap in a bit. Michael's going to give us a recap of the live trading room this morning, and then we'll go live on TradingView for 30 minutes, and then we'll finish that recap and close out the week with our good word for the day.
All right. Good to go, I think.
Yep, looks good.
All right, here we go. Good afternoon, everyone. Today is Friday. Finally, we have a Friday. It's finally going to be our worst day of the week, and then the weekend's going to be even worse. Weather-wise. Trading-wise, it was great. Fantastic day. But anyway, it's the third day of May, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com and click on this purple button. Now, that is not going to bring it to this page anymore. It's now going to bring it to this page. If I refresh it, nope, I didn't refresh it. Hang on. You got to refresh this page like that. And then once it refreshes, I'll do it twice, just for the measure. And there. It'll bring you to this page where all that we ask for, all that we ask for is your name, your email, and your phone number. And down here at the bottom, you give us your trader machine ID or your TradingView username. Click on the register button. After you do that, you'll be sent all the information you need to get into the room in the morning. But more importantly, well, as importantly, we'll be sent all the information to enable the indicators for you so you can get your trading platform set up. Now, if you don't know how to do that, once you give us the information, go here to trading platforms and just follow the instructions in the videos. Okay, it's not that hard to do. Just follow the instructions in the videos and you get yourself all set up and ready to go. Okay. Okay. So, let's see. We have, I'm thinking, give me a second. It'll come to me. Oh, the spreadsheet. That's what I got to do. All right. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today on the NQ, we made 143 ticks. On the Russell, we made 9. On the YM, we made 107 ticks. So over 100 ticks on both of those markets. That is pretty good. I don't think I've ever done that before in one day. Very morning session anyway. On the ES, we're minus 8 ticks. Now this is with one contract. So I had 17 contracts on. You guys can do the math. On the ES, we lost 8 ticks. All right, so that puts us at $1,195 with one contract, $1,195. Today it took 5 minutes and one trade to get to the goal for the day. At that point, we were at $2,550. We took a total of 37 trades this morning. So 37 trades. Wow, that's a lot. So on a month now, we're at 2022 over 3 business days. We're averaging 674 per day on the month right now. And on the year, we're at 35,757 and we're averaging $425 per day. Now over here, this is the important stuff. I say this every day, but it's true. If you were to start the 24/20 blueprint with me last January of 2023, you'd be up to 17 contracts now. And so far this year, I've worked 31 3/4 hours and averaged $5,580 an hour, getting my goal for the day. If you start out with one contract and you worked your way up, so far this year, you're averaging $992 an hour. All right, averaging $992 an hour. Still work the same 31.75, probably less hours, and you're averaging $992 an hour, which is great money. Anytime you can get that, great money. That's in 1 hour. That's more than a lot of people make in a whole week. The regular work week, if you look in here, the regular work week came out today to be 34.2 hours, I think, right? Look at the economic calendar. So we had horrible news today. All the news was bad. Almost all the news was bad. But the important news was all bad. Right here. The unemployment rate, worse than expected. Non-farm payrolls, not even close. Look at the government payrolls. The government payrolls, they're expecting a build, an addition of 63,000 jobs in the government, and then they got 8,000 jobs in the government. What does that mean? Now this is the really sad part here. The year-over-year earnings is down. The average weekly work hours is only 34.3. The average hourly earnings is down. And that's significant. That's a significant decrease. All right, well, it's not really a decrease, but it's lower than what they were expected, right? But that's bad news because, you know, inflation's not changing. You know, inflation's not keeping up with our declining wages, is what this is basically saying. You know, inflation would have to be negative. We'd have to have deflation to keep up with our declining wages. Anyway, all this stuff, all bad news. Bad. So what do we have coming up on Monday? Let's go look at that. I'm just curious. Go to Monday here and see. Monday morning, we have just medium impact stuff. We don't have anything high impact until Thursday next week. Initial jobless claims, and that's barely high impact. And Michigan Consumer Fed. So you have a slow news week next week, right? After this big news week this week, we have almost nothing next week. So we'll probably see it in the markets. Anyway, I digress. I did go through the spreadsheet, right? I did. So let's get into the actual trades. Again, if you're just getting in here for the first time, you haven't seen the purple arrows and you haven't seen the alerts that are popping up and all that stuff, there are some new things that are going to be coming out very soon with Context P and the alerts. I created alerts last night. If you look in here, you can now add an alert specifically for different arrows going long and short. Right, specifically for different arrows going long and short. Now, I went over that in the partners meeting last night. I actually did more with it today. And then those of you that were in the partners meeting last night, I went over the purple arrow as well. And the one thing that I said in the purple arrow was I was going to make it so the black line had to be in the right color. It couldn't be in the wrong color. That means it can't be in the silver and it can't be in the green. All right, so anytime you get a purple arrow short, the black line has to be above the high of the bar. Anytime you get a purple arrow long, the black line has to be below the low of the bar. Okay, that's basically what it says. And I did implement that last night, and you can see that it's done really well with just the purple arrows. And you know, the purple arrows can trigger at any time. They don't rely on the slingshot. All they rely on is the outer band color and a pull away from and back to the ribbon. Okay, and now you know that the black line has to be in the right color as well. All right, going all the way back here to the beginning. I didn't even get into the start of what I wanted to get into. Let me go over here for a second though, and not that one. I guess I can put it on this one and go to you. Oh, sorry. I meant to do it all the way back here at the beginning. And do youtube.com/CFR. There we go. All right, here's the live stream. Let me click on that so I can see any questions that happen to come in. And we'll bring up the other question box so I can see any questions that happen to come up there as well. Nobody's asking any questions. It's great that you guys don't have any. Robert, I see you made a statement a little while ago, Robert G in YouTube. But anyway, let's get into the actual trades. Okay, on the YM, I'll go back to the beginning and sit alt and back because we do have a bunch of bars today and a bunch of trades today. All right, it was on the YM that we actually got the gold this morning when we got the gold for the day. Bring it down. Here it was. Our first trade on the YM was right here. We picked up 30 ticks on the very first trade. And then the next trade was right here. And we picked up, let's go through it here on the YM. Picked up 6 ticks on the next trade. And then the trade after that right here, we picked up 18 ticks, it looks like. 20 would have been 56. Yeah, 18 ticks on the one after that. A break even, then 2 ticks on that one to get us to 56. Then the next one, I missed the blue arrow in there, missed the blue arrow there. Just going through, we didn't really have a lesson plan today, but this one right here, I ended up with 30 ticks. It got me up to 86. Then the next one right here, I got 14 ticks. Nope, actually this one right here. I got 14 ticks, I got me to 100. I got 11 ticks, got me to 111. Then the stop out started. I stopped out there to bring me down to 91. and I missed a trade. Somewhere in there was a 10 tick win. I don't know where it was. It was probably on this blue arrow right here. There was a 10 tick win that got me back up to 101. And then a stop out here. That got me. We went to 111, then went down to 101, and then we went down to 91. So is that right? 2 stop loss in a row. Yeah, that's right. That's right. Okay, so we went from here, 111 down to 101. Then went from 101 down to 91. That's right. Okay, and then we got a 10 tick win right there. That brought me up to 101. Then a 2 tick win got me to 106. Then we're getting toward the end here. You can see all the blue and purple arrows that are triggering in here, and most of them are pretty good. And our last, we had 1 tick trade right there, getting 1 tick on that. We had a break even on this very last one here on the YM. And that was it for the YM. Now during the break, purple arrow there that worked out, there that worked out, there that did not, there that did not, there that did not, and a blue arrow here that would have been break even. This one actually did work out. It did go down, and this one didn't. This one did actually go down. Sorry, this one did go up. So that worked out. That ended up working out. That one did not. That one did not. This one did. Still working on the purple arrows though. And with your help, those of you guys who were in the partners meeting last night, you know how to get access to that. Even in the room this morning, you know how to get access to it. All right, I'm gonna hit Alt and back on the Russell because we had a bunch of trades on the Russell today too. Well, not a bunch, but we had more than normal. Okay, hang on. Getting back there. Here we go. So on the Russell today. Big purple arrow there. We started out with this stomp out -10. Then we had a break even. Then we went back to break even. Then we had +10. Then went back to break even. Then a +9. That got us to +9 on the Russell. And I guess maybe we didn't have a bunch of trades, but you can see all the purple arrows in here. For the most part, they're working out pretty good. Blue arrow worked out well. Let's see. I don't see any other trades in here yet that I took. All right, I didn't have a lesson plan today, so I can't say that I was in a lesson plan. We had a break even right there. No, on Friday, so on the lesson plan. Okay, then we get into the break. So we had a blue arrow here that would have let me out. Purple arrow here that would have worked out just fine. Purple arrow here that would have stopped out. A green arrow that would have worked out. And a green arrow right here at the end that would have worked out. And that was the Russell. Okay, now we get into the ES. We did have a few trades here on the ES. That one won't take as long to get back to the beginning. So we will go back to the beginning here like this. Okay. All right, so the first trade here on the ES, we stopped out on -10 ticks. Then the next trade was right here. We picked up 12, X +2. There's a green arrow in here that was right on the news. I didn't do anything with that. Green arrow here, I didn't do anything. I missed. Blue arrow here, I missed. Purple arrow there, I missed. Blue arrow here, I missed. Finally, I get a green arrow over here and it stopped me out. That put me from +2 down to -8. That's where I ended it on the ES. During the session, there was more trading going on in here. I'm just going to learn on something. During the session, there was more trading going on in here. There was a short there, a short there, a short here that I did take, got a break even on, a long there that I didn't take, a long there that I didn't take, a long there that I didn't take. Oh, well, those are during the break. Sorry. Those are during the break. That was it, pretty much during the break. A couple of long trades, and they all worked out pretty well, except that green one. That was the ES. Right. Now, I want to show you something else here in a minute. When I get to the bigger picture stuff, now the NQ, we had a whole bunch of trades on the NQ. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Every one of our trades on the NQ did something, I think. I got to do the alt back thing on this because we have a whole bunch of bars to go through on this. All right. Does anybody have any questions? I don't see any questions popping in yet.
There's a question for you in YouTube.
Oh, there it is. I see it over there. Hang on, let me move this thing out of the way. What's the benefit of looking at multiple time frames on a trade? Okay, well, you don't see me looking at multiple time frames on a trade here, but the benefit of looking at multiple time frames in a trade, I'll just answer your question, is you can give yourself an overall general direction. I mean, we actually show multiple time frame information right here, right? The outer bands are your long-term trend, and everything that happens within them is the short-term trend. But if I were to go to another platform, like let's say this one right here, this is a 30-minute chart. Okay, and what I was telling everybody earlier, this bar right here, it was not the 10:30 bar, this 11 o'clock bar right here, this 11 to 11, 11:30 to 12 bar. I'm sorry, this 11:30 to 12 bar right here. Right, this is the 1 o'clock bar. Yeah, so this 11:30 to 12 bar, this one right here, I was saying is a really important bar because if it would have closed down below here, it would have given me a bearish bias for the rest of the day until it got down to here. By closing up, it gave me a bullish bias for the rest of the day, suggesting it's going to get up to here, at least up to the weekly trading zone, possibly all the way up here. But you can get a bias on the market from a larger time frame. And then when you get down to your smaller time frame, like if we had on the NQ, we're on the NQ right now, okay? The bias from the larger time frame was to, to look at long trades. What you can do is take a long opportunity like this one right here and say, I'm going to let the longs run and not trail my stop too close. And when you get shorting opportunities, say, I'm going to take the shorts, the ones that trigger that are valid short trades, but I'm going to trail my stop really close because I want to keep the profit locked in because I don't think it's got a lot of leg in it. I don't think it's going to go very far. I think eventually the shorts are going to turn around and start going back up. Does that answer your question, Sharif? If you were to crunch this up like this, you can see in the bigger picture, this is the move up, this is a retracement, and this is the move up, and this right here is a retracement and the bigger move up, right? If I draw it out like this, this is your move up, this is your retracement, and this is your move up. That's what should happen here. Okay, because the markets are always doing this, right? They're always going up and down, up and down, up and down until they stop, and then they start going in the other way. And so we're in one of these places right here, right now, where it's trying to get up to there, and then we'll have another pullback and try to get up to there. And there are identified by these weekly trading zones that I just showed you on that other platform. Let's see, like right here is one spot, right here will be another spot, and then right up here is just the end of this leg length that I drawn in the room this morning. Okay, that is the benefit of looking at multiple time frames. Okay, so I'm gonna erase all of that and get back into finishing with the NQ because we had a bunch of stuff. Right? Yeah, I didn't even start going over the NQ trades yet. Did I? I don't think I did the NQ today. No, I didn't. I finished with the Russell. We had a lot of trades today, so it's going to take me a little longer to go through all the trades. We had 37 trades this morning. So it was a busy Friday morning. Worse. All right. Go all the way back here and start here. You can see all those happen in the pre-market. Our first trade here on the NQ was a break even. Our next trade on the NQ was a break even. And our next trade on the NQ, we got 4 ticks in profit. The next trade after that, another 4 ticks in profit. So we're at +8 at that point. We stopped out somewhere. Wow. I went through all this before I finally took another trade. Okay, somewhere in there I stopped out. I didn't draw it in, it looks like. But somewhere in there I stopped out and went to -12. I don't know where it was. It could have been right here, possibly. Green arrow didn't go anywhere. It could have been right here, possibly a green arrow that didn't go anywhere. Any one of those could have been my stop out. I did get a stop out of -20 ticks, so that put me at -12. And then right here we gained 10 ticks to put us at -8. That's a weird number of ticks for me. Now we gained 4 ticks. That's why. Okay, I knew 10 ticks was a weird number for me because I usually go in 4 tick increments with the NQ. So it was +4, and that put me at -8. That's better. And the next trade that we took was, hang on. hang on, over here. All right, we picked up 30 ticks on that. That put us at plus 22. We picked up 30 ticks on that. That put us at 52. We picked up 30 ticks on that. That put us at 82. Then somewhere in here, we went from 82 to 111. So we had 29 ticks somewhere. Somewhere else in here, we had 29 ticks. And then we stopped out. We went from 111 down to 91. Okay, 111 down to 91. And then we stopped out again. And we went from 91 down to 71. And then I started making it back. From 71, we went up to 79. We had an 8-tick gain there. Then we had a 30-tick gain there, went up to 109. And we had, right here, we went from 109 to 113. So we had a 4-tick gain. Then we went from 113 to 143. So we had a 30-tick gain. And then on our very last trade, we had a break even. And I don't know where I put it in, but we had a break even on the very last trade. And that was it. Okay. And that was it. So let me go through this part before I get into the rest of the stuff on YouTube. Let me just say this: if you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button right here. When you click on that, and we brought to this registration page. See right here, it says there's no credit card required for the trial. And bring it to this registration page. Just fill it out. All right, name, first name, last name, email, phone number. These are all quick drop downs. Just answer them truthfully. Otherwise, it'd be put in the wrong category. Down here at the bottom, if you have NinjaTrader, give us your Ninja Machine ID. If you have TradingView, give us your TradingView login ID. It's important that you do this stuff. Okay, it's important that you give us your machine ID and login ID, so we can set up the indicators for you, or we can enable the indicators for you, so you can set up the indicators. All right, when you hit register, you'll be sent all that information, and it will be sent all that information too, so we can both act upon the information that you just put in. All right, when you do that, and we let you know that we have enabled them, which we will do as quickly as possible, you need to come in here and go to trading platforms and just follow the instructions. For DT Pro, that's what I trade on, DT Pro. Right, that is my trading platform of choice. That is this right here. This is DT. Okay, that's what the DOM looks like for DT. It's TradingView. This is what I chart from. That's all the stuff that you've been watching right here is TradingView charts. And down here is NinjaTrader. If you have Ninja, you can use Ninja to chart from if you want to. Ninja does not have the same stuff. Ninja and DT Pro, the charts themselves don't have all the same things that I have on TradingView. But you can trade on either one of those platforms and chart from TradingView if you want to. And you can also chart from NinjaTrader if you want. The spreadsheet that we have here, the results from 2013, the spreadsheet goes back over 10 years, by the way. The results from 2013 up to 2023 in the spreadsheet, those 10 years are actually doing it from the DT Pro and NinjaTrader charts that look like this. Okay, this is what the DT Pro and NinjaTrader charts look like. Oops, like this. Hey, it never came back. There it is. This is what the DT Pro and NinjaTrader chart look like. All right, you have a slingshot down here. You have paint bars. You have the same ribbon, but you have paint bars in here, and you have 2 lines in the slingshot down here. You don't have the context. You don't have the outer bands. All those questions that were asked a few minutes ago about the longer term stuff, you have to draw trend lines to figure that stuff out in here, or look at a larger time frame chart. Whereas with the TradingView stuff here, we have it all right in front of you. And we do on those two, the long-term direction when you're using NinjaTrader and DT Pro, the long-term direction is given to you by the cycle down here in the slingshot. If it's red and going down, your long-term direction is bearish. If it's blue and going up, your long-term direction is bullish. But it's not as precise as it is with our TradingView stuff. We have the outer bands telling you immediately what's going on. If they're blue and going up, that's bullish. You wanna only be thinking about long trades. If they're white and going up, that's still bullish. You want to be thinking about long trades. If they're red and going down, you only want to be thinking about short trades. If they're white and going down, that's still bearish. So you still want to be thinking about short trades. Okay. Okay. That was a lot of stuff. Seems like. Wow. And it's 1:14. I really talked through everything today. They just tell me to go out. Be quiet. Going too far. Anyway, so we haven't taken a single trade yet in here, have we? I don't think. what we would be looking for now, this blue background you see right here is a no trade zone. That means you're not trending enough to take a trade. All right. When it's out of the blue trade zone, you look at the outer bands to see what direction you're going in. Outer bands to see what direction you're going in. And if you're above the ribbon, you're looking for a pullback down to the ribbon so you can take a trade off of the ribbon. All right. The way you will get a trade off of the ribbon is if this slingshot goes into the oversold and comes out of it. This green arrow right here went into the oversold, came out of it, gave you that green arrow. Right, the black arrow went into the oversold, came out of it, gave you that black arrow. That's how you get the green arrows, the black arrows, and the blue arrows. The purple arrows, you just have to be trending, long and short-term trend. So that means the outer band has to be blue or red, and price has to be above and pull back to the BBC, but not too deep into the BBC. The black line has to be in the right color to give you a trade. Okay, that's the way it is with the purple arrows, right? And that's still a work in progress right now. You added at the green long at 82 and you're out at 95. Great. Hang on. Green long at 82 and out at 95. Oh, okay, you're talking about in here. That one right there. Yes. Good. All right, and now what we're looking for is, we want to see price hit this, but it's going to give you a black arrow right now if it pops out of the oversold, right? See the little white arrows that you see right there are indications that you are in an uptrend and price is oversold. That's what that is, right? It's letting you know, hey, you're in an uptrend and price is oversold. So get ready for a long trade. Right, that's what the little white arrows are saying right here. You're in an uptrend and slingshot's oversold. Get ready for a long trade. So then you get your black arrow. And in this case, it was worth taking because you had a little ways to go to get your stop to break even. So now I'm just going to lock in 8 ticks on that right now. 12 ticks on that right now. And I'm out with 12 ticks. Now, if you're new in here or you're watching in YouTube and you're new in YouTube, you see I'm trading with 17 cocks. And that's not because 17 is a lucky number or anything like that. That is because I earned my way up to 17 contracts using the 2420 blueprint. So let me describe that to you. The 2420 blueprint means you start out with one contract, and for every $2,000 profit that you earn, you can add another contract. So if you quit trading when you get the goal for the day, and my goal for the day is $100, and so there's an average of 20 days per month, 20 business days per month. So $100 times 20 business days per month is $2,000 a month. So if I just add one contract a month, when I reach $2,000, assuming that I make $2,000 per contract per month, quitting when I get the goal, that means you get the goal and you stop. And you keep working your way up that way. That's the 2420 blueprint. I started that out last year in January. Started out with one contract and added one contract a month all the way through the year. So we ended last year with 12 contracts. And in December, we made $29,090 trading 12 contracts, quitting when I got the goal for the day. So it took 135 trades in 932 minutes in December to do that. And this year we started out with 13 contracts, and then went to 14 in February, and 15 in March, and 16 in April. And now that we just started May, we're at 17 contracts. All right, and so far this month, I worked 26 minutes getting the goal for the day. And, 26 minutes. Yeah, I guess 26 minutes getting the goal for the day. On the year, I've worked 31.75 hours, but almost a half an hour so far with 17 contracts, 26 minutes, and I'm up $8,670. Quitting when I get the goal for the day. All right, so that's over the 3 business days. I've worked 26 minutes getting the goal for the day so far in May. So if you started with one contract, this year, doing the same thing, adding one contract per month, you're now in your 5th contract. And so far this year, same 26 minutes with 5 contracts instead of 17 contracts. You're averaging $992 per hour on the year. And so far this month, in 3 days this month, we're up $2,550 so far. So that is a 24/20 blueprint. That's why I'm trading 17 contracts. Okay. Just want to make that clear to everybody that was interested. All right. So right now we're waiting for more long indications. There was just a blue arrow here that I didn't see. It would have stopped you out just now. It would have just stopped you out if you had taken it. Right. And this green arrow over here would have done the same thing if you had taken it. And there was no trade in here to take. Okay. So right now we're kind of waiting for the markets to decide if they're going to continue up for the rest of the day. I think they will, but they're taking their time doing it, it looks like. I did not realize crude oil was getting killed this week. Yeah, we can look at crude really quick if you want. And we can go look at other stuff too. Crap, I only have a few minutes left. We can still go look at other stuff really quick. I kind of want to see what Bitcoin's doing today. All right, so this is the number of Bitcoin because it broke down below a support level that it should have, and this is the number it'll probably get down to. All right, so Bitcoin's got a little bit of a pullback going on today. Oops, I found the wrong thing. It's got a little bit of a pullback going on today. This is what it looks like. This is the level that it should not have broken down through, and it did. So we got a green arrow short here a couple days ago. We're going to have another green arrow short here pretty soon, probably. If we close up and we hit the ribbon right now, we'll probably end up with another green arrow short over the next couple of days, and maybe over the weekend. That's something else to consider. This stuff trades all week long, right? You don't get a day off on the weekend. And so this could trigger another green arrow here tomorrow. Right? It's possible. And it's Bitcoin. Now I want to look at one other thing. Ray wanted to meet with him. Probably wants me to talk about XOM. Because he puts a big trade on XOM every morning at the open. And almost every day he does well with it. Right? And this right here is TV trades. You can see right there, TV trades. That's a different place. You get a free trial with this if you take a free trial with us. Okay, if you go to mytradingiq.com and take a trial, you get a free trial with this too. But going back here to that, all right. We don't have any trade setups in here right now. Does anybody have any other questions? Somehow the YouTube thing moved around. Sharif, I think you haven't asked any more questions since the last one, so you're good. And nobody's asked any questions in the room yet. So we're just waiting right now. Waiting for you all to ask questions. We don't have any trades here right now. This has to put in a higher swing before we take another trade in that direction. This doesn't have anything. We're in a no trade zone. We're in a no trade zone. We're in a no trade zone. The blue background is a no trade zone. You don't see any trades when it's in a blue background like that. Okay. Now, one of the things that I was doing this morning was comparing this ES chart, which would be the same as the NinjaTrader chart, to the TradingView chart, and going through what you'd have to do to take a trade here. Like this bullish separation down here is what you need to take a trade. That you need to make sure you're in an uptrend, and I'm not really sure we are. Just barely in an uptrend right here. So you'd have to draw a trend line that goes like that. Okay, so you would have actually had a long trade here, right here. You would have had a long trade. And it looks like with the 7-tick range bar, if your long was here at 53.50, your stop would have been down at 51.50. So it would have stopped you out right there. I'm sorry, no, this is 7-tick range. You would have had a 10-tick stop on it. So I would have had a 10-tick stop. Your stop would have been at 51.50. It'd be at 51 even. So it looks like you would have almost stopped out on that so far. And the same trade over here, it gave you this long right here, you'd be in the same situation. Your entry point would have been the same place. Okay, and so you'd be in the same spot right now. Almost stopped out. Almost stopped out. The different platforms, different look. Okay, this is what we used to do. It's a lot easier doing this now. You see, you get the arrow here saying you have a trade. You don't have to draw a trend line and wait for the close on or above the trend line. You actually get an arrow that says, hey, here's a trade. That's the only thing we're getting to trade on, though, sadly. And it's now 1:25. We only have 5 minutes left. 5 minutes left. We could get something here on the Russell. You see how we got a lower swing? We came out of the no trade zone. We have a lower swing. We'll be looking for that to pull back up and test the ribbon now. Okay, so we get something there on the Russell. And look, this didn't completely stop out. There's still hope on this. It needed to go down one more tick to completely stop out. Now, if I was in it with 17 contracts, I always get slippage, so I know I would not have gotten exactly the right fill. I know I wouldn't have. So I would have stopped out by now if I was doing that. You know, one of the things I can count on getting every day is slippage. Once you start trading a whole bunch of contracts, it really doesn't matter what you trade. You're going to get slippage. Okay. Now, I haven't tried to trade bonds with that many contracts on them, but I'm pretty sure I'd get slippage on bonds too. Bonds have, you know, if you look at the bonds, they have a ton of volume, ton of liquidity. I don't have a bond dom up, and I think I maxed out as far as the number of DOMs that I can show. But look, that ES trade is starting to work itself out. And the 10-year notes have the most. Yeah, see, too many. The 10-year notes, let me close one of these other ones down. Close that one and see if I can open a 10-year note one. Here it is. This is what I'm talking about. Now that's some liquidity right there. You trade 1,000 contracts and not move price. It's the 10-year notes. So I could trade 17 or 20 or 50 or 100, 500, and it wouldn't move price. You see how big the chunks are that it's jumping around in? I don't think this last volume thing works at all. Show auto sum bid and ask. Yeah, we want to do that. Auto sum bid and ask. And show last volume. Let's just hit apply on that. Let's see, this is incredible liquidity here. You could place, if you had enough money in your account, you could place 1,000 contracts on this, and it wouldn't move price. Might get one tick of slippage. I might start looking at that. What's the ZN look like? Let's look at this on the ZN. If I remember right, ZNM. Okay, so let me just do a little analysis of this ZNM thing for you. See how it's all blue like that? That means that the sensitivity is not working here. So we'll change that to 0.05 just to see what that looks like. Okay, that's still too much. We'll change it to 0.01. Oops. 0.1. See what that looks like. That's better. You really only want to have no trade zones. Really want to have no trade zones when it changes directions. Okay. So if we spread this out and we just look at this. Now, I don't remember. I think the 10-year notes, I think, are $16 per tick. I think something like that, $15.75 or $15.50 per tick, something like that. But well, this is on a 7 range. I probably wouldn't do it on a 7 range. We're going to have to change the sensitivity again when you drop down to a smaller time frame like that. The sensitivity is going to be even less. 0.5. That's better. Okay. So with something that's 16 bucks a tick, it doesn't move around all that much. See, this is the whole day right here. This is your whole day. And it doesn't move around all that much. You're gonna want to go on a smaller time frame, okay? Because you might only get one trade opportunity all morning. Like this is in the pre-market right here. It didn't give another trade opportunity. You could even go down further than the 4 range. Go down to a 3 range. You're on a 3 range. You got a couple of opportunities this morning. You had one blue arrow there that worked fine. Blue arrow here that worked fine. A purple arrow there that worked fine, and a green arrow here that worked fine. So every arrow actually worked fine today. The black, green, purple, blue, they all worked well. And that's on a 3 range. So your stop on this would be about 4 ticks. Interesting. Interesting. It makes me want to trade it. I don't think they have a micro for the bonds. I'm not sure. Let me see. Let me go over here and see if they do. I doubt that they do, but they have so much liquidity. They might. Let me see if they do. MZN. Do ZN. All right. No, I'm trying to put an M before it. No, I don't think they have one of those. Your DAO doesn't show all the numbers in the bid and ask columns. How do you turn on that for Ninja? For Ninja, well, you got to pay extra for that, Ian. Even with NinjaTrader, you got to pay extra for it to get the depth of market. NinjaTrader has a thing though. There's one program in NinjaTrader. I forgot what it is. Jake uses it. Jake F uses it. There's one program in NinjaTrader that will show you out like 20 or 30 spaces. NinjaTrader actually has a setting in their DOM. I'll show you the setting. Okay, I'll show you the setting. Yeah, it is considered data. It's depth of market is what it is. But in NinjaTrader, they have a setting right here that says number of market depth levels right here. So if you pay for it, then you can set right here, whether you want 10 or 20, if you pay for it. But there's another program that shows you like 40 of them out, something like that. And that's, that's more information you need for the trading that we do, Ian. And Daniel just said the depth of market depends on the broker. Some of them will offer something more and some of them won't, apparently. I don't know. My broker, I mean, there's still an account there with Phillips Capital, I think is what it was. But I don't keep any money in that account with NinjaTrader because I don't use Ninja to trade with. But the depth, Daniel says, depends on the broker. Okay, and Daniel, I know Daniel's been using NinjaTrader for a really long time. And you've been fine without it, just thinking any more edges. Yeah, it will definitely give you an edge to your trading. I mean, because you use that stuff to manage the trade once you get into it. You don't use it to get into a trade. 2006, Daniel said, so almost 20 years. You've been with us almost all that time too. So Ian, the advantage to having that information, I mean, it's not that big of a deal when you have this kind of liquidity. It's not that big of a deal, but when you have this kind of liquidity, then it is a big deal. And it's, let me use the ES for example right now. Okay, so here's our ES, and right now you see this is way higher than that one. It's like 30% higher than that one. So there's something up here that's going to happen. There's something up here that's already happening. Everybody's looking for price to move up, and it's going to move up. Now, I don't know what the ES DOM looks like. I mean, I don't know what the ES chart looks like right now, but I know his ES chart. So the ES chart doesn't look like anything, right? It's not giving you any kind of a trade. So you have to take the trade from the chart. But I know if we did have a long opportunity here, what this is suggesting now is that it's going to go up. The the charts aren't suggesting it's going to go up, but the DOM is suggesting it's going to go up. It's suggesting it's going to go up to right here at 51.55, 51.54.50, and then 51.55. So I can draw those in for you, and we're going to get up there in like the next 5 minutes probably. That's not a reason to enter the trade, though, Ian. It's not a reason to enter the trade. It's a way to manage the trade. If we had a long trade, like let's say we were back here, and there was stuff saying 51.58 is where it was going to go up to, then you can use that as your target when you're in the trade already. You trail and you stop, loosen up the trail, expecting it to get up to there. All right. Now, originally, when you get into a trade, if you look here at trading platforms, not trading platforms, you go here to trade rules, down here at the bottom, the exit says look left for the prior swing higher low. That's first, and then learn to read the DOM. All right. You can't read the DOM if you only have the current bid and ask. So you can only read the current bid and ask. You're stuck with just learning this and learning price action. Now, this part right here, Ian, I mean, you're a partner, so you know about this part and about the Wednesday part of the lesson plan where I go over the leg lengths. That's all you got. If you don't have a DOM that you can read like that, that's all you have. You have this and you have leg lengths, and you also have the weekly trading zones. Okay, but that's all you have to use as targets. So once you run out of this, and once you run out of weekly trading zones, you have to understand the leg lengths. Okay, but if you have the DOM, then the DOM gives you just another piece of information that's right there, current, in the moment information, right now information. Okay, so it's worth checking that out. I use it all the time. I'd feel blind if I didn't have that. Every trade I take, I'm looking at that. I'm taking all that into consideration once I'm in the trade and I'm managing the trade. I take all that stuff into consideration. And a lot of times, even before I get in a trade, like right here on the Russell, where we've pulled back like this far right now. Now, I know it's setting up for a short trade right here on the Russell, but look above it and see what's above it, right? 43.50. 43.50 is about the only thing that's jumping out at me on the upside. So if it were to keep going up, 43.5 is going to hit 43.5 right now, probably. It did. That information is useful. Like when it was going down here, you look down to see what's below that when you're down here. Keep looking down to see what's below it. And you can see then those are going to be great targets for the next pullback. You can draw a line there and say, okay, I saw that there's a number down there, because when it pulls back up here, you're not going to see that number, not until you get all the way down here. But it's there. So you can use that information all the time. Okay. So yeah, it is definitely one more tool that you can put in your box that you're going to be using a lot. It's like the adjustable wrench. It's not like having, a 1/2-inch wrench. It's used for precisely one thing, but it's something that they can use, when the time's right. All right, there's my analogy. All right, guys, I have gone way over. I'm now 1:38. I'm going to wrap it up. If you guys have any questions, or if you haven't taken a free trial with us, let's go here again one more time. It's here. If you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on the purple button right there, and it's going to bring you to this page. Just fill out this form. If you do that right now, you have a trial over the weekend. We get you set up with your indicators over the weekend, so you'll be able to mess around with things over the weekend. Okay. And yeah, then you'll be all set for next week. Right. That is it, guys. I had a fantastic day today. With the trading, it was great, and everything else that we created last night was working pretty well. Everything from the partners meeting last night turned out well today. So hopefully you all have a great weekend. Stay safe, make good decisions. And if you have any questions, you can email support@cfrn.net or support@mytradingiq.com. All right. Thanks for coming, everybody. I'm going to pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. Recap of the morning session.
Today it took 5 minutes and one trade to get to $2,550.
Great job.
Thank you.
Okay, guys, we left off on gold, so we'll pick back up there. Here's where we opened last night. We consolidated along the BBC. We're above it, we're below it. And finally, buyers came in. You can see red and falling, turned to blue and climbing. Sent us up to the zone overhead, which we expect resistance until proven otherwise, just as it was yesterday. Remember, the vertical line separates today, Friday, from Thursday, from Wednesday, Tuesday. And scroll back, you get the idea. Resistance to support. Resistance. Resistance. Now, this candle here, that was off that 8:30 economic report this morning, which sent the market screaming higher. Barely took out that swing high from yesterday right there. Quickly reversed. It did hit the long target. It quickly reversed, brought us all the way back again to the short target. Then price got below the BBC, and we traded almost to the zone below. Buyers came in. We're now positioned back above the BBC. Got blue and climbing, but we got potential resistance overhead. 23.12, 23.13, and then 23.17, and then back to the zone at 23.18. It's Friday afternoon. Friday afternoons are often pretty sleepy, but we'll see what happens. Now, all of these are zones that were published Monday morning, 6:15 a.m. Eastern. The alerts that go out this Sunday night will be based on this week's zones. But the new zones will come out Monday morning at 6:15 a.m. Eastern. That gives our members time to get them on their charts before Wall Street even wakes up for the week. So the next move for gold should be to the upside. You got to keep in mind where your obstacles are. Okay? And you only need a $1 move in gold. So from 23.12 to, let's see, it's a high right here, 23.10.7. I'd let it get up here. Yeah, get above these guys. Go 23.15 to 23.17. $200 per contract traded. If you earn the right to trade 10 contracts, that would be $2,000. Silver. And again, these targets that you see, all of our members and trial members had them last night 10 minutes into the open. The first candle right here. Globex opens at 6 p.m. Eastern, Sunday night through Thursday night. So we opened, we had red and falling overhead. That sent us down to the BBC. Pullback holds more often than not. Bounced off the BBC right up to the weekly trading zone. Right where we had the high yesterday. At the zone. At the zone. Resistance will always send the market looking for support. Pullback holds more often than not, so there's your support. Back to your resistance. Resistance this time sent us through the BBC. Sent us all the way down to the target. This bullish cross, which led to an extended move the first time price revisited that area, became good support. Right here. Second time down, it managed to get through it. Then the econ report came out, sent the market flying higher for a flash, but then look where it ended up. By the time the 30-minute candle closed, all of that movement had been evaporated. It only takes 2 pennies in the price of silver The price of silver moves 2 pennies. That's enough to get you your goal for the day. So we've hit the long target, we've hit the short target multiple times, and our low today is higher than the low of yesterday. And we're above the BVC, so just like gold, could get a run to the upside. Now, because it only takes 2 pennies, 26.76, 78, 76 to 78, goal for the day. And last but not least, the euro. Here's reopen. Ran up to the zone resistance. Now, this is the zone that was published Monday morning, 6:15 a.m. Eastern. Here it is Friday. Resistance. Resistance sends us to support. Price always reverts to the mean. In our case, the mean is green. Call it the BVC. Bull bear cross. Price crosses above it, we're bullish, anticipating higher prices. Price crosses below it, bearish, anticipating lower prices. Cross above it for higher prices. So we consolidated at the zone, and then off we go. Then came the news, and that took us to the high of the day. Then pulled resistance, sent us looking for support. Pull back to the VBC, that support. Bounced us up to blue and climbing. Remember I said when blue and climbing gets directly above price, then it can actually become resistance, because it's probably on its way to becoming red and falling, which is bearish. So right now you've got price trapped between red and falling, which is bearish, and the BVC below, which is potential support, bullish. So what should you do? You should let price get above red and falling. Okay, we'll probably consolidate sideways. Let price get above red and falling before you go long. Or let price get below the BVC and take out this low right here before you think about going short down to the zone. And a final look at the daily chart. Okay, still hugging that trend line. Got a little wick sticking up above it. A rally into the end of the day could take us up to the 62% fib extension. If we close above that 62% fib extension today and Sunday night, make sure you keep this bearish cross in mind right here, right around 52.30. Okay, that will most likely be good resistance, at least the first time up. Now, if the institutional traders don't want to carry this home over the weekend, see, it takes financial commitment for price to go up. But for price to fall, all it takes is for the institutional traders to hit pause on the buy side, and price will just deteriorate all by itself. Okay? So how we close today sets the stage for what we're going to see Sunday night and ultimately next week. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have a teacher. That's why we put so much emphasis on our live training room. 2 hours every trading day. It's an interactive environment where you're watching trades being put on and taken off live in real time, an explanation of every trade, every move made, reason behind it, while you trade along in your demo account so that you can qualify to go live, and you ask every question that pops into your head. Because our strategy is so simple, after a couple weeks, find yourself repeating the same questions, and you'll go, wait a minute, I already know the answer to that. You'll be surprised at how simple it can be. Trading's not easy, but it can be simple. So if you want a shot at being the 1 out of 10, whether you hire us or somebody else, you need someone to teach you how to do the job. Just like if you wanted to be a lawyer, pilot, an engineer, any profession, not only requires that you get an education, but you also have to get certification, licensed, pass tests. And that's another reason so many new traders fail. It's because you don't have to do any of those. You don't have to get an education. I mean, it's like walking into a casino. Sir, are you sure you know how to play blackjack? Are you sure you know how to play the slot machine? Are you sure you understand the odds on the roulette table? Oh, they don't ask you those questions. Better for them that you don't know. As long as you got some chips, you're their friend. When the chips are gone, they'll show you the door. Not only do you have 2 hours of live training in an interactive environment every trading day, but you have access to one-on-one private mentoring, no additional charge. Strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames, just as I just showed you, all those different markets. Support, resistance, back to support, back to resistance, over and over, again and again, is a never-ending cycle. As a passport holder, you'll receive the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and of course you'll be able to attend the members only workshop on Thursday night. And when you become a member, you get the golden key that opens all the private channels in Telegram. Everything a trader needs, all under one roof, at one low price. mytradingiq.com. Go there and get started today. All right, let's wrap it up with our good word for the day. Yesterday we talked about committed and connected. Always treat people with respect. That's been one of our house rules at CFRN since we first broke the airwaves back in 2005. Everybody gets treated with dignity and respect. 1 Peter 3:15. Always be prepared to give an answer to everyone who asks you to give the reason for the hope that you have. But do this with gentleness and respect. Two ways to get an egg out of an eggshell. Part of 1, crack it open. Or 2, put it in a warm, loving environment and allow it to incubate and hatch. Now, the second way preserves the chick, while the first one kills it. Similarly, 2 ways to get the good news of the gospel across to people are to 1, pound them over the head with it, or 2, love them into God's family. Have you noticed that some evangelism is just a thinly veiled insult? You need what I have because you're so awful. People do need the good news, but your disposition can keep them from receiving it. Respect unbelievers. Don't try to humiliate them. Respecting means accepting them. That doesn't mean you have to approve of their lifestyle. Acceptance and approval are different. But everybody has the right to be treated respectfully. The best way to share the gospel with unbelievers is to surround them with love and acceptance as you share it with them. Be respectful, sensitive, and caring. Theologian D.T. Niles said, evangelism is just one beggar telling another beggar where to find bread. Share God's word. You do the sharing, God will do the saving. Once you sow the seed of God's word into someone's heart, love them and leave them, and trust God to do His part. That's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.